67% of Gen Z, 62% of millennials, they're already asking ChatGPT for financial advice. The actual question now isn't whether you should, it's whether it's been right. I spent the last 30 days running an actual experiment. Same 5 money questions, asked weekly, every answer fact-checked against published sources, 1 full month living inside the budget it gave me. This is the data. And I want to be honest up front. It got 4 out of the 5 right, but the one it missed could have cost me $5,000. That's the part nobody is talking about. In the next 9 minutes, I'll show you exactly which questions it nailed, where it hallucinated, what happened during the budget test, and the single prompt structure that fixed 80% of the bad answers. Here's the experiment in plain English. I built a list of 5 questions that cover the most common money decisions a normal person makes. Question 1. Should I prioritize paying off my credit card or contributing to my 401k? Question 2. How should I split $1,000 between an emergency fund and starting to invest? Question 3. I have student loans at 6% and savings earning 4%. Do I pay them down or keep saving? Question 4. What's the best way to budget on an irregular freelance income? Question 5. How should I think about Roth versus traditional in 2026? I asked each one weekly in a fresh chat with no prior context. I logged the answer. Then I cross-checked every claim, every number, every recommendation against actual published sources, CFP guidance, IRS publications, the Federal Reserve's consumer data, peer-reviewed studies. Here's where it surprised me. ChatGPT got 4 of the 5 questions correct on the first try. Not roughly correct, actually. Mathematically, defensibly correct. Question 1, credit card versus 401k. It said, pay off the credit card first if your interest rate is above 10%, but always capture your full employer match before doing anything else. That's the correct order. It matches every CFP framework I've ever read. Question 2. It told me to split the $1,000 by funding a $500 emergency starter fund first, then putting the remaining $500 into a low-cost index fund through a Roth IRA if I qualified. Same answer Ramsey, Bogleheads, and basically every neutral source would give.
Question 4, the freelance budget. It walked through what's called the profit-first model. Take income, immediately split it into tax, owner pay, profit, and operating expenses. That's a real named published methodology. I was honestly impressed it knew which framework to reach for. And question 5, Roth versus traditional. Its answer correctly accounted for the 2026 contribution limits, $24,500 for a 401k, $7,500 for an IRA, and explained the income tax bracket logic clearly. That's an updated answer. The model knew the new numbers. But here's where it gets interesting. Question 3 is where it broke, and not in a small way. I asked, I have student loans at 6% interest and savings earning 4% in a high-yield account. Should I pay down the loans or keep saving? It told me to aggressively pay down the loans because, quote, the interest you save by paying off 6% debt always beats the 4% you're earning. On the surface, that math sounds right, but it's wrong, and here's why. It ignored taxes. Most federal student loan interest is tax deductible up to $2,500 a year, so your effective interest rate isn't 6%, it's closer to 4.5%. Meanwhile, the 4% you earn in savings is taxable, so your effective return is closer to 3%. The decision still might lean toward paying down the loans, but it's closer than ChatGPT made it sound. And critically, it depends on your tax bracket and whether you actually qualify for the deduction, none of which the AI asked me about. It just gave a confident answer with missing context. That's the textbook definition of a hallucination. And the data backs this up. Got It AI estimates ChatGPT hallucinates 15 to 20% of the time. The Money Magazine team ran their own 25-question financial advice test. In 2025, ChatGPT struggled most on questions involving current events and tax-specific edge cases, exactly where my experiment broke. Okay, so the question and answer test gave me 4 out of 5.
But there was a second part of the experiment, actually living inside the budget it gave me. For 30 straight days, I gave it my income, my fixed expenses, and my savings goal. It came back with a modified 50-30-20 plan, 40% invested, 30% flexible spending, 20% toward a specific goal, 10% buffer. Clean on paper. Week 1, it worked. Automatic transfers ran, money disappeared into savings. I had spending money. Felt like a system.
Week 2, my car needed new tires. $400 unplanned dollars. The 10% buffer covered most of it, but not all. Now my flex money was strangled. The neat categories didn't survive contact with real life. By week 3, I was breaking the rules, borrowing from the goal money to pay for things the buffer couldn't. By week 4, I'd adapted, stopped tracking weekly, started tracking monthly. The framework was good, the rigidity wasn't. This is the part most people don't talk about with AI. It gives you the right structure, but it can't feel what rigid actually does to you in week 2. Here's what changed everything. About halfway through the experiment, I figured out a single prompt structure that fixed roughly 80% of the bad answers. I'm going to give it to you now. Free. No paywall. Most people prompt ChatGPT like this. Should I pay off my student loan or invest? Short, one sentence. Sounds reasonable. That's exactly the prompt that produced the broken answer in my test. Because you're asking a confident by design tool a vague question. It will fill in the gaps with assumptions you can't see. The fix is what I call the 4 anchor prompt. You give it 4 pieces of context every time, in this order. 1, your specific numbers. 2, every constraint that makes your situation different from the average. 3, the assumptions you want it to make explicit. And 4, an instruction to flag what it's uncertain about. Here's what that looks like in practice. Instead of, should I pay off my student loan or invest, you ask, I have a 6% federal student loan with a balance of $12,000. I'm in the 22% tax bracket, and I qualify for the student loan interest deduction. My taxable savings are earning 4%. Walk me through the after-tax math, list every assumption you're making, and tell me what you're uncertain about. That last instruction, tell me what you're uncertain about, is the one most people skip. It's also the one that makes the answer trustworthy. So here's where I landed after 30 days. 3 things ChatGPT is genuinely good at, 3 things I will never trust it for again. What to trust it for? 1. Explaining concepts. ETFs versus mutual funds. How a Roth conversion works. The mechanics of tax brackets. It's a faster, more patient version of Investopedia with no ads.
Here's the safest way to use ChatGPT for personal financial planning. Treat it like a thinking partner, not a financial advisor. Use it for 3 things. First, organize messy information. Have it turn your income, bills, debts, goals, and deadlines into a clear budget. Second, build frameworks. It can compare snowball versus avalanche debt payoff, or Roth versus traditional retirement contributions. Third, stress test your thinking. Ask for assumptions, missing information, risks, and sources to verify. But slow down here. Do not trust tax-specific answers until you check official IRS publications. Do not rely on current rates, laws, or programs unless you verify them. And if it sounds perfectly confident on a complicated money question, pause. ChatGPT can make money decisions clearer, but you still own the decision. For my free prompt library and fact-check checklist, check the description. Then comment, what money question would you ask first?